shows us the bank statement, and they have, let's say, $50,000 in the account, and that's how much they put in the application. That's going to be their down payment. So when I ask them, how about your closing costs? And they look at me, what are you talking about, closing costs? I'm like, well, someone has to pay for the attorney. Someone has to pay for the appraisal. You have to prepay your taxes, your insurance. There's the underwriting processing fee. So it adds up. And most of the things are actually prepaid services, right? What's prepaid services? It's like your insurance, right? You're prepaying for insurance, which you're yet to use. You're prepaying your taxes for the city, which you're yet to be built for those things. But it's already built in at closing because the bank wants to have that cushion there. So when they start getting billed, they have the funds to pay for it. The things that don't get, is not prepaid, is actually services that gets done through the process, is the appraisal, the attorney fees, and underwriting and processing fee, which is, people in our back office doing the paperwork for us.
So closing costs is not money lost, right? It's money that's just you're putting for savings for things that are going to be built in the future.
Exactly. So I will say it's half and half. Or 2/3. 2/3 is mostly the prepaid services, which is taxes and insurance, and then the other 1/3 is the professional fees that go through the process. And on average, you're talking about maybe. I always tell my clients, get ready, 2 to 3% is going to be your closing cost. So whenever I'm doing like a quick math on my head, I just do 2.5%. And I like to have the 3% mindset because I'd rather have more funds than lower funds, right? Because imagine you go to closing week and then you tell the client, hey, you need, $30,000 between your down payment and your closing costs, and they have 27. Now we're short. Now, if they had the 30 and I tell them they only need 27, now they're going to be much happier with that. So the mindset is always to have more than what's needed, because you don't want to have the stress at closing week that you need to say, hey, can I buy the house still? Can I not? Am I going to miss out?
What happens in this situation? Let's say you're 3,000 shy. How can you supplement 3,000?
So every scenario is different. Some people receive grants. Some work jobs, they will give you, hey, if you're buying a house, we'll give you X amount towards your house. A lot of family members also receive gifts from family members whenever they buy a house, because it's such a big life moment, right? Especially like if you have newlyweds or they're having kids, the parents always come in because it's like, I personally don't forget my first purchase. It's a what's it called? It's a life changing moment. It just you will never forget. So a lot of families tend to help out on that when it comes down to that. They give gifts towards home purchases. Yeah.
Do you think homeowners ever go back to being renters?
I'm yet to meet one that has done it on purposely, right? Maybe they overextend themselves. Life happened. They lost job. They got hurt. They couldn't afford anymore to live where they want. But I'm yet to meet someone that, hey, I'm better off today renting than I was when I was owning my house. It does not. No, no. Yeah, that never happens.
You'd be surprised. Like, no, I like paying 100% interest.
No,
Yeah.
no.
Um, no, that's good. That's good information.